A very warm welcome to this session, live from Vilnius in Lithuania. Very excited to be here and to moderate this panel. We have a session on sustainable finance, so we're going to be talking about where finance meets impact. Thanks, of course, to ROCKIT for hosting us. We're here at ROCKIT in Vilnius. ROCKIT is the home of fintech and sustainable innovation. So first of all, let me introduce our speakers. We have Remy Salters, who's the CFO of Swedbank in Lithuania. Hello. Here in the studio with me. And then joining us on video link, we've got Marius Jurgilas, who's we got Tom up first. So Tom Duncan, who's the CEO at EarthBanc. So Tom, very warm welcome to you. Thanks for joining us. And then we have Marius Jurgilas, who's the board member at the Bank of Lithuania. So Marius, great to see you online as well. Super, and I'm Alex Gibb. I'm a partner at Katalista Ventures, supporting triple top line startups here in the Baltics. Okay, we only have 25 minutes for this session, so let's jump in with a series of questions on the meaning and the definition, I think, of sustainable finance, first of all. We'll move on then to talking about customers, customer trends, what's actually driving sustainable finance. We'll take a wider look at the ecosystem. We'll look at a little bit at public policy, also the role of financial institutions, of course, and then wrapping up a little bit later on, we'll move to a little bit more of a forward-looking view for sustainable finance for the future. So let's kick off with a simple definition, just to make sure we're all on the same page and what do we actually mean here. Tom, tell us, what on earth is sustainable finance?
Thanks, Alex. Sustainable finance is often used term and not all well understood. So I'll try and lay out a couple of broad themes. Now, sustainable finance, we have the word sustainable. Now, the origin of the word sustainable is coming from the sustainable development movement in the 80s, where there was the Brundtland Commission, where governments around the world mapped out and said, look, we need to get our sustainable management of resources, of forests, protecting our ecosystems, and also protecting our climate and waterways. And ultimately, this is contributing to the health of the planet, but also health of community. So this is the origin of the word sustainable. And when we bring together that into finance, it means issuing things like green bonds to fund the development of whether it's renewable energy, clean technology developments, regenerative agriculture, waterway protection. And so sustainable finance is a bit of a catch-all term for all of these activities that are going on in the market right now.
Super. And Marius, if we pop over to you, do you see it the same way? Is there another angle you have here or something else that comes to mind when you hear the word sustainable finance?
I guess it means many things to many people, but to me it means, in very simple terms, making sure that good things stay good for long. So it's a dynamic definition for me. How do we ensure that the society, regardless of what type of activity it engages in, be it making things warm, ensuring that business is running, or that finance is done in a respectable way, that even if it's good now, let's make sure that it stays at that level for a very long time.
Super. So really much more longer-term view on development and development itself. And Remy, is that something that you share? Is that the same view?
Unsurprisingly, I agree with my co-panelists. The only thing I would add is probably it's very important that sustainable finance does not become a compartmentalized term in the same way as, say, for example, one speaks of fair trade and one immediately thinks of a little corner of the overall global trade. In my view, sustainable finance is, in essence, what we will call finance in 5 years' time.
Super, super. Okay, so I think one of the big things there that comes out from what you've all said is not just this sort of this compartmentalized view, but a much more longer-term view, holistic, and then really solving some of the grand challenges that we have today. So if we take that a sort of step further and make this very concrete for our audience, Tom, how does this work in practice when somebody's actually investing in a sustainable finance product or buying a sustainable finance service? What actually changes in the environment? You mentioned green bonds there. Maybe you could just talk us through a little bit more of the mechanics of how this works, please?
Oh, yeah, sure, Alex. The green bonds market is growing really quickly, and there's a lot of demand for it. I think in 2019, I think there was $500 billion or euros of green bonds issued in the marketplace. Now, this is growing fast, and there's a lot of demand. But one of the issues is there's often difficult to get that funds that are raised onto the ground and into the impactful projects and impactful mechanisms that are really going to deliver the environmental and social and economic impact. So there is a little bit of a pipeline issue there. Now, one of the things we can say is the carbon offset markets have been growing. Last year, there was 214 billion euros of carbon traded globally. Climate finance, ESG investment markets, they're all meant to solve the climate change problem. But what we can see is carbon is increasing in the atmosphere. And biodiversity extinction and deforestation is accelerating. Now, we could say, why aren't the markets solving this problem? And our analysis of it is that there's a last mile of climate finance problem in that large pools of capital in Western markets are not getting through to on the ground emerging markets quickly enough or in a way that's transparent and low cost and low friction. And so green bonds that are restoring forests are becoming very popular. Agroforestry is becoming very popular. Regenerative agriculture, very popular. And there's a lot of emerging market action there. And what we've tried to do is to see, well, how can we bridge that gap of the last mile of climate finance? And so just a case study in India, there was a green bond that we issued in 2019. It contributed to growing lots of mangrove trees, wild honey production, commodity offtake buyers, and this all helps bring a financial yield back to the investors in the green bond. But importantly, it reforests mangroves, which protect those communities' homes from hurricane-driven storm surges. And we can actually track those trees that are planted and are being protected by those communities that are harvesting wild honey from those forests. We can track them with satellites and know that the trees are there and the local people are being incentivized by being paid carbon payments. So that's kind of where we think is the next level of sustainable finance and green bonds and where it's going. It's just one case study, and we hope that there's going to be many more of this sort of level of incentivization at the local level to solve that last mile problem for sustainable finance.
I think this is a really good example that you've given there, and I think this also can give a lot of sort of sense of security and optimism to the audience and people watching. To really feel that, if I'm actually investing in these products and services, that I know that forest is being protected or carbon is being removed from the atmosphere. So this real, sense of direct action as a result of me putting my money into financial services that are sustainable. So I think a really, really positive message to start. So thank you for that. Excellent. Let's move on then to the customer view, and Remy, maybe we can start with you here and just think a little bit about why do customers care? Why should what's actually motivating and driving consumers and customers to actually use sustainable finance solutions?
Yeah, I mean, that's an interesting question in the Baltic context, and I suppose my personal assessment at this stage would be that probably the Baltic consumer doesn't care enough, that the Baltic consumer is still fairly price-driven. As a result, one of the tasks of sustainable finance is to create incentives for a move to more sustainable consumption patterns and production patterns. So one of the ways of doing that is to introduce new products. So we've introduced new lending products for solar panel installations, green leasing, all these kinds of things. We're in the process of bringing over from our Nordic colleagues sustainability-linked loans as well. So the idea there is basically that you're accompanying the corporate customer on their journey towards more sustainable operations by introducing covenants in the loans and price triggers in the loans that are related to sustainability. So those are the main things. The other thing I would say in the context, moving away from rainforests and that kind of thing, and to again a Baltic sort of developed economy context, is that one of the big challenges is not just to find green investments or to find a supply of green things to invest into, but to fund the brown transition. And this, I think, is still a work in progress in terms of regulation. The European Commission, as we all know, has been very active in trying to develop a common language for sustainable finance, sustainable investment, and sustainable lending. But that is still very much focused on the leap into green, I would say, and not so much the transition from dark brown to light brown.
Okay. Good analogy there. And then you've also talked a lot about sort of incentivizing consumers to change, but and also that sort of knowledge transfer and that sharing of experience from the Nordics to the Baltics. Marius, I mean, do you see this in the same way? And is there a role for the regulator to promote this shift, especially not just with companies but also with consumers as well?
And before we proceed to the regulatory angle of this, I would like to comment on this consumer question that you asked first. I heard another phrase recently. It's called stakeholder capitalism, not to be, mixed up with socialism, right? It's stakeholder capitalism, that there are much more in, serving your stakeholders just besides those that have their equity stake in what you're doing. And I think that is what is being missed when we're thinking about consumers in sustainable finance. These are the consumers of the financial services, and maybe the proliferation of the subject and understanding and activity is not happening to the scale that we want, because consumers are not capable of reaching those services. And what do I have in mind here? Some of the financial market participants, some of them on this panel here, have introduced products which are green from a kind of consumption perspective. But if the pool of funding that is funding that activity is a general one, and it's not labeled, and consumers are not kind of being able to tap into that type of investment themselves, that's, I think, what is the bottleneck. So if we can democratize investment in CO2 emission trading, allow people to, allocate a proportion of deposits or equity or whatever funds allocated in the investments to specific purposes, in a very tractable way, I think the consumers will be the ones that will be driving the process, and we will not have to create regulatory incentives, which I'm happy to talk about.
Mm-hmm. Super. And then coming back, Remy mentioned also price sensitivity in the Baltics. Is that a view that you share? More of a general public perception perspective, personally, and then also talking more widely about stakeholder capitalism, or the stakeholder interaction. We heard from Tom at the start there talking about protecting rainforests in the Amazon. Also, is there a clear enough link for people that what happens in the Amazon is actually affecting me, in the Baltics and with my quality of air, now and in the longer term as well. So what are the links with all of these different factors? And Marius, I'd like to continue with you, if especially on the price sensitivity in your sort of general perception. Is that really something that we can say is true in the Baltics?
So are we moving to the discussion on regulatory angle here, Alex?
Okay, so let's hear a little bit more then on the regulatory side. What else can let's go back to the incentives. So when Remy was talking about sort of incentives to encourage people, let's think a little bit more about what are the other regulatory tools.
I can link to what has been said at the very beginning. Sometimes markets do not work for the very important reasons that there are no markets. I cannot trade with the people that will be around 200 years from now. There is no possibility for me indirectly kind of write a contract and ensure that my pollution is being they get some kind of reward from that. We share the benefits of my activity together. So that's the reason why we need regulation. And I guess the regulatory interference in this is very well motivated, and what has been done lately, and I think what we'll be focusing on are across three angles. So the first one will be in assessing the risks that activity that financial market is facilitating, how financial market is facilitating this risk-taking activity from a sustainability perspective. And that will be done concretely in the stress testing frameworks that we will be introducing for various financial market participants. And the second one is disclosure, already referred to by our panelists, that there is a driving force at the European Commission and regulatory fora to make sure that everything is measurable and disclosed to the consumer. And the idea here is if I can really understand the impact of my financial actions, I will be more responsible when I'm doing those. And the third one is making incentives. And those incentives, should be very pragmatic ones. Like we are pushing financial market participants to fund small and medium-sized businesses. We have introduced so-called SME factor. Remy can talk more about that. Maybe it's time to introduce a sustainability factor.
I think that sounds like an exciting concept as well, and we can jump into that too. Tom, coming back to you again, talking about sort of the pricing sensitivity and looking at the range of products and services that you're offering. Is there a trade-off when, from a consumer perspective, that if I'm putting money into a sustainable financial product and service that enhances sustainable finance, am I making a trade-off between return or yield and doing good, or is there some kind of balance there?
Yeah, this is a hotly debated topic, Alex. There has been this broader view that sometimes the sustainable finance product could deliver a lower yield. But what we've been seeing is green bonds, if there is a difference, it can be very small from a green bond to a regular bond in terms of the coupon yield. And when it comes to impact investments, which is another a subsection of sustainable finance, we could say, particularly private equity impact funds, they're delivering yields of about 5 to 10%, whether that's in renewable energy projects, whether that's in green real estate development. And I worked in some of these impact funds for some time, and definitely we can say the yields are there. It's just that really there's a deficit in the project pipeline and enough scalability. So I think that's where, and just talking about, the Baltics region, we're just working with a Baltics consortia at the moment for an EU call to specifically address Baltic region's forests. And how can we leverage more investment into that, track it, and also provide investment opportunities for people in the region to invest more in these assets, and how to protect against fire danger. We've seen, whether it's Portugal, Spain, USA, Australia, going up in flames, and the air quality is atrocious. And I think people investing in their local environment to protect their future air quality is a top priority, I think. So I think this is where there's going to be opportunities where we can scale up sustainable finance products with all the stakeholders. As Marius pointed out, stakeholder capitalism is here, and the opportunities are here. So I think it's working together to find these opportunities and scale them and get them in front of the consumers so they can say, okay, well, I could put my money in a cash deposit, which is earning really, as we know, very little right now, or I could put it into some sustainable finance products or funds. And that's what we'd like to see scale up in the Baltics, the Nordics, and more broadly. Yeah.
Super. Thanks for sharing that. So Remy, you alluded to again some of the incentives and the new products and services that you're bringing to market to encourage consumers to engage with the topic in general. Then Marius was also adding in terms of where there's market failure, where the regulator can actually step in and make a change. And then you also mentioned the European Commission. So the ambitious new Green Deal. What else is happening, and what else can be sort of a wider impact on the whole area of sustainable finance?
Well, there's more to European action than the European Green Deal. The European Green Deal, I would say, is almost the cherry on the cake. So it's been at least 2-3 years since the European Commission sort of took sustainable finance into an action plan. That action plan has a very broad scope, which takes in as Marius mentioned, disclosure, but also investor protection, prudential regulation, a very, very, very broad range. That's the hope is basically that, well, the hope, my belief is that this regulatory framework, although it's a work in progress, and of course there will be a lot of pitfalls along the way, will serve to close the market failure that Marius is referring to, and redirect private capital flows towards sustainable investment alongside the Green Deal on the public side. So the two together should make quite a powerful cocktail, if you like, in the context of the post-COVID recovery as well, and the next EU budgetary period. The other thing I'd mention is disclosure and understanding of our impact is important, not just from the perspective of financial market participants, but also from the perspective of the end consumers and the end corporates. Initiatives that increase people's understanding of their individual footprints and corporates' understanding of their individual footprints will greatly accelerate progress in sustainable finance.
Super. I mean, that's another, very positive and optimistic message to be looking forward. So, so thanks for sharing that. And if we continue a little bit on that theme, especially being here at ROCKIT, which is an active player in the Lithuanian ecosystem, what are the other partnerships that could be out there or should be more active? So I'm thinking, you were talking, everything from the regulator's role to the European Commission, a whole bunch of initiatives from the private sector. We see a lot of fintechs here that are active. Are there any other, partnerships that should be built to sort of strengthen the move here? Is there anything else that's missing?
I think we basically have a trilogy here, right? We have the public sector and the regulators on the one hand. We have the private sector and we have the consumer. Now, within even outside sustainable finance, as we're all aware, sitting in ROCKIT, fintech has been a very important theme and driver of change in the financial sector recently. There is a need for a similar thing to happen on the sustainability front, for sure. That is one aspect of partnerships that could add to the mix. The reason being, we have a major market failure on our hands, and we have to reinvent the way that the global economy works. And this is going to require huge amounts of innovation. Existing institutions, by virtue of having been around for a long time, have legacy, have established ways of thinking, established ways of operating, and of course, a shake-up is always required.
Sure. So this is something that's really coming through, I think, strongly from all three panelists. This sense of failure. We're failing with the grand challenges. There's market failure here, and there's a lot that we need to do in order to make a significant change on this. Tom, you were just talking about some of the initiatives that you've been involved in with Baltic Forestry as well. Are there any other partnerships that you can tell us about, or perhaps things that are a little bit more unusual that were not expected when you were starting your business?
Yeah, it's I guess one of the interesting things that we've found since we've been proving out this carbon accounting and carbon offsetting and the last mile of climate finance in smaller projects, and now we're finding multilateral banks are talking with us, and we we do have a contract with the multilateral bank to help them come to grips with this problem of how do you get the climate finance or the sustainable finance onto the ground. And I think this is, and also how do the carbon offset mechanisms, whether it's going carbon neutral, the EU target, or whether it's nationally defined contributions for carbon markets. There's a lot of work to be done on frameworks so that it's easy for the sustainable finance, which, as Remy, I think, presciently pointed out, sustainable finance will be the normal finance in 5 years. So it's now about building the frameworks together so that it's easy for finance to flow where it wants to flow to help regenerate the planet and the climate and be good for business at the same time. So that's something unusual that's come out of it that we weren't expecting. But I think what we're doing now with carbon calculator offsets, APIs and user interfaces for banks and for fintechs, we'd like to see it possible that if you're a bank, if you're a fintech, that you could tap into carbon offset information and carbon market information, as well as sustainable finance information to be able to access pipelines that otherwise you might not see. And these are these sort of smaller projects that are on the ground that often are not getting funding or finance they need, and it's hard to find that transition capital. So I think there's a role for aggregating deal pipelines and also providing more open banking APIs that make it easy to swap data, information, and transparency on where carbon stocks are, and where the opportunities are for customers to do good through the banks, through the financial institutions. So it's this larger framework is being created, and I think we can all play a part in it to help the sustainable transition.
Thanks, Tom. Good insights there as well. And then talking about the similarities and also differences in the Nordic and Baltic regions, Marius, we've looked at this from a public policy perspective, also from the consumer perspective, also what the banks are doing. Are there any other things that you'd like to share or insights that you'd like to share in terms of both differences and similarities that you see?
Absolutely, and I'm speaking here just my opinion based on the surveys that I have seen being done by some of the NGOs. And there are some very nice cubicles or cubes spread around you and Remy, and they have numbers on them. And based on the survey, only 3% of population understand what these numbers mean. I'm sure that Alex can explain that these are numbers of 17 Sustainable Development Goals, but only 3% of population, at least in Lithuania, know what these Sustainable Development Goals are. So there's quite a lot of not financial education, but kind of awareness that needs to be done. And I could not agree more with what Tom has been saying about kind of this missing link, aggregation, small ticket size of the projects being done. And here we can step back from this and look at what is happening from this European level. So the chair of the European Commission has said that at least 1/3 of this new funding being agreed among the member states will have sustainability strings attached to them. But what does it mean for the countries of this region, and here I mean the Baltic region more specifically, is that we might not be capable to absorb this funding if we do not create structures, and here these structures have to come from the private market, from the likes of Swedbank and Remy's colleagues, so that they create innovations that ensure that these granular small projects, be it in alternative energy, energy efficiency, mobility, or whatever, or just developing more socially aware businesses, that average individual can tap into those. And while this being done, these structures need to be secure enough for the consumer. So, for example, we can easily create structured finance products that link sustainability, measurability to the things being invested. But history has taught us that structured finance products can be like a razor in the hands of a child. So consumer protection from that perspective also needs to be taken into consideration. So these are the specificities of this region, and I think there's a lot to be done for the regulators, private market participants, and NGOs to ensure that this subject gets the attention it deserves.
Thanks, Marius. And I have to say now, looking around me, that I've totally failed today with SDG number 5, with gender equality, that we have an all-male panel here today. So that's definitely some homework and something for me to go away with. But you've also given sort of a nice call for action, I think, to all of our audience, to go away and think about what your startup or your business is actually doing to contribute to the Sustainable Development Goals. That actually brings us to the end of our session. We've run out of time. We still had quite a few more questions and things to touch on. But I think it's nice to finish with that call to action with something that people can go away and do. Tom, Marius, and Remy, it's been really good to hear, especially I think with getting these really concrete examples of what is sustainable finance, what is the concrete impact it makes, the regulatory role, the individual role as a consumer, and also the wider partnerships and the actions that people can play in the wider ecosystem. So I think this has been great to have you all. Thank you very much. Thanks again to ROCKIT for hosting us today. And I hand back over to the studio. Thank you.